Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly video for the 13th of May here in 2022. And what a difference a day makes. We're seeing the market pull back. The last two sessions were steep sell-offs in the market, similar to what we've been discussing, a little bit, I think, overdue, but what I've been calling rubber band snapbacks. What's a rubber band snapback? That's one. That's two. Consider that three, but really haven't had one since late September and into just about October of 2020. And what's happened since is the market has crept. There is a pullback. There is a pullback. And all we're trying to do is find pullbacks, but markets that get overheated, and this definitely got overheated, did snap back with a rubber band effect. And that's just think about like a rubber band. If you pull it up a little bit and it snaps back down, not that big a deal. If you really pull that rubber band, that's what happens. So markets that do get overextended are difficult. They are difficult for the long side of the market because at any point in time, the market can fall precipitously, which it did. But for the short side of the market and playing the probabilities, we're looking for not necessarily a vicious snapback. We're just looking for a normal pullback or a normal retracement, let's say to the 20 or the 50-day moving average or some type of trend line. And that really hasn't happened since April's, that's the last time we actually had a pullback, was March into April. That's not quite a pullback, and what we had now is not simply gentle, it was violent. But once again, what a difference a day makes in the market. We had the support bounce, we call them reflexive bounces, or buying the pullback, buying the dip, all sort of terms for it, but that's the next phase after the pullback and the market stabilizes. It's not looking for a crash, it's looking for a rally or some type of continuation of the uptrend. We don't know which ones will fall sharper or which ones just simply hit support and rally up. So that's the perspective in tonight's video. On the S&P, it has just fallen or has fallen into the 40-50 level. On the NASDAQ, it has been weaker, but has fallen to 13,000. And these are key levels to watch on your charts. And it will be true for the Qs if you're trading into the ETFs or some type of swing trade. That is going to be focused on about 315, 316 in the Qs. And for those in the spiders, or the SPY, that's going to about 405. The same logic will be true in the Dow mini futures, but the Dow's been stronger. It just had this snap back or the violent rubber band effect from 35,000. And again, we can see similar types of periods. Now, nothing predicts the future, but it just gives a sense of what to expect given similar times the market has gone, fill in the blank, crazy, overextended, irrational, way above fair valuation. And again, things don't tend to snap back like a gentle pullback. They tend to fall hard. And this is what has occurred. And the Russell, which is a small cap index, it's holding support just above the 2100 level. And it really has a sideways trend. We don't want to classify this as up or down. It's just going sideways. And that's from a steep rally. That Russell had a strong catch-up rally to play at the end of 2020 and into the beginning of 2021. But while the other indices up here have made new highs, keep in mind that is in March. This is the Russell made the high right here. The S&P continued much higher. The Dow continued even higher than that. And the NASDAQ, similar to the S&P or similar to the Russell, has actually underperformed. So those are two things to watch in terms of money flow or the markets that you're trading or the stocks or ETFs in which you're positioning. The weakness, or we call it relative weakness, meaning the NASDAQ has fallen further from the highs alongside of the Russell. It is just further, it's down at these lows. But the S&P, and we'll just see it in the Dow, those are a little bit stronger. I do want to highlight a few stocks that are continuing to get these strong trends. And we discussed money flow. I really felt like today was a little bit of an opposite day or a backward day to yesterday. Yesterday being Wednesday the 12th. And that was just a quick theme. The equity market was down about 2%, and it was a rough sell day, kind of a fall to the downside, liquidation, sell swing, and crude oil and the energy sector, if we remember, were the only things, major markets, major ETFs, that were positive or bullish on yesterday's session. Most stocks, if not just about all the stocks, were negative. And in today's session, we have the opposite. So that's just something to watch with respect to whether or not you trade crude or whether or not you trade energy stocks, for example, ExxonMobil or Chevron Texaco. But just something to keep an eye on, that it was the exact opposite, where the only sector to the downside was energy, and the only major market to the downside, if we count crude, gold, bonds, and the bond futures, and of course our equity futures, this was the only one that was down, and that was down 3%. So crude was, again, up or bullish on yesterday's session as we zoom in, and today it was down. So that's just a key focal point to watch. Now, we can look at our market watch, and this is the S&P 500. This is what we call a market cap weight index or a market cap weight chart. And to do this, it just helps visualize which stocks are leading or pulling on the market or holding it back. This is on the Market Watch tab, Visualize, and the heat map for the S&P 500. You can actually view your positions and create your own watch lists within this tab. And again, this is the market. There's a couple things to point out. Number one, everything's green. Not everything, because Tesla, which is a large market cap stock and something we always keep an eye on, it was bearish. In fact, I'll highlight the only really bearish sections of the market today. Tesla, if you want to call these bearish, that's okay, but it really was the energy sector. These are energy stocks, energy, and that has to do with the XLE, and they tend to correlate roughly with crude oil. So that is the S&P 500. It shows up a little bit, maybe not quite as clear, in the S&P 100. Here's the heat map for the Russell. Healthcare was bearish along with energy. And here's the NASDAQ. So Tesla is a large part. It's one of the top 6 stocks in the NASDAQ, but the bulk of the stocks were bullish or positive. The other way to see this, and it's what Don shows, is the index watch. He might show the S&P 100. You might check on the S&P 500. But at the end of the session, 444 stocks in the market were positive or closed up by at least a penny, and 60 of them were negative. Again, this was about the exact opposite of yesterday, where energy was the only sector to be positive and everything else was in the red. And it's just a sense of where's money flowing. That's still difficult to peg, because yesterday just about everything was bearish. Today, just about everything's bullish. So what stocks made new 52-week highs today? And why should we care about those? Those are market leaders, or leading the market up. And I sort these. I do this on a daily basis. I just make a note. If I have positions or want to put positions into these trending stocks just as a spread or a short-term swing trade, these tend to be candidates. But I like the market cap to be bigger. And the biggest is AbbVie Labs. Next is Mondelez, CME, Allstate, and down the list. Might not be stocks that you're familiar with, but they are strong stocks getting stronger. And we'll just take a few peeks at these stocks. We'll start with AbbVie Labs. And we'll put a weekly chart over here for the perspective. So I've got little trades in AbbVie from years past. And it's just making higher highs in this. Mondelez as well is pushing new highs. The weekly chart is a broader trend, and the daily chart is the short-term trend. But we are curious about these names because they are considered, or should be considered, strong stocks getting stronger. And something like this, they can even go parabolic and persist in their uptrends. For aggressive traders, it does give an opportunity to play puts or to short sell something that is, again, grossly overextended. But that doesn't always work as a strategy, at least for the long term. Short term, absolutely. Just looking for a rubber band snapback. Most of the time that happens, but it does not always happen. But these stocks can be used from that perspective as well. Here's Alexion and some other components, other names, again, that you might not be familiar with. But in the S&P, 13 stocks out of the S&P 500 made new 52-week highs. And if that number expands, the logic and probability would then start to favor new highs in the equity market. And if that seems far-fetched, I understand that it does. I'm trading alongside. It seems difficult to grasp that. We had the exact same conversations, excitement, fears, emotions, when the market fell sharply in these points of time. Will this be the one that falls and goes down? No one knows that. But this is similar to these pullbacks at the moment. And if history is a guide, that could lead to a new high, just in these other cases. That's what we'll be watching in the next week as we push through May and enter the next month of June. But as always, be careful and be safe. This is Corey Rosenblum with tonight's Theo video update for May 13th, 2021.